Welcome back to The Explainer. So, if you are a focused learner trying to figure out why exactly your morning brew is suddenly costing you a fortune, or, maybe getting a little cheaper, you are in the absolute right place. Today, we're going to unpack the total roller coaster that is the coffee market. We'll be diving into the macro forecast from meteorologist and commodity analyst Jim Roemer, and we'll see how global weather patterns are basically pulling the strings behind these wild price fluctuations. Okay, let's dive right into this. $3.60. That was the massive peak price that coffee actually hit last August. I mean, for commodities traders and coffee roasters alike, this was a jaw-dropping high. It literally felt like the ceiling had just been completely blown off the market. But as we all know, what goes up, especially in the super volatile world of agricultural commodities, well, it doesn't always stay up there. Which brings us to this number, $2.45. Just a month ago, coffee prices took this incredibly steep plunge down to a low of $2.45. That is a massive, incredibly sharp drop in a really short window of time. I mean, just imagine your own grocery bill swinging that wildly from month to month. So the real mystery we're exploring today is what exactly caused this dramatic collapse? How do we go from these sky-high record prices to suddenly hitting the floor? Section 1, the coffee price collapse. So, to understand the timeline of these massive drops and spikes, we really have to look at the underlying data. Now, while the rest of the market was out there panicking or just riding the high, Jim Roemer was crunching the numbers. And get this, he actually called for this exact collapse in coffee prices right from that dizzying 360 peak last August. Honestly, forecasting a severe drop when a market is running that hot, that takes some serious conviction. And as you'll see, his conviction was entirely grounded in atmospheric science, not just your typical market sentiment. Section 2, Weather over Geopolitics. Let's move to the timeline and see how this builds, because this is where we really learn how to separate the actual signal from the incredibly loud noise driving all this volatility. Between that huge peak in August and the 2.45 low just a month ago, the news cycle was completely dominated by huge geopolitical events. We had massive trade tariffs dominating the headlines, followed by escalating fears surrounding an Iran war. Now, normally, you'd absolutely expect this kind of global instability to keep commodity prices wildly inflated and erratic. And sure, traditional news definitely created some volatile geopolitical noise in the daily trading sessions, but ultimately, prices just plummeted anyway. And this perfectly highlights the difference between what's loud and what's actually fundamentally important to crop yields. On one side, you've got the geopolitical noise, right? The tariffs, the Iran war, all screaming for our attention. But on the exact opposite side, you have the actual undeniable meteorological signal. So while traders were glued to cable news, the true force dictating that massive price collapse wasn't happening in political offices at all. It was happening right in the atmosphere. Meteorological data was pointing toward highly favorable growing conditions, which ultimately meant a huge abundance of coffee beans. And hey, it's basic economics. When supply goes up, prices go down. Now, what's really interesting about this is how Roemer tracked a very specific climate driver. It's called the AAO, or the Antarctica Oscillation Index, and he paired that with a weak La Nina. I know, AAO sounds like some really dense scientific jargon, but it's essentially just a climate driver that shifts global weather patterns. Basically, when the AAO goes negative during a weak La Nina, it creates incredibly favorable weather for global coffee crops. And more favorable weather means an oversupply of beans, which is exactly how Roemer predicted the price would take that dive down to the 2.45 low. Section 3, Brazil's rain drives rally. But just when you think the market has settled comfortably at the bottom, boom, we get a sudden whiplash. Because weather doesn't just pull prices down, it can force them violently upward too. Roemer looked at the shifting data and actually issued his next major prediction, which was an unprecedented weather anomaly in South America. We ended up seeing literally one of the wettest late June and early July periods in decades. I mean, just imagine trying to harvest millions of coffee beans in a continuous, completely unseasonal downpour. It's a nightmare. The heavy rain causes the beans to prematurely fall to the ground and rot, making them nearly impossible to dry. It completely disrupted the crucial Brazilian coffee harvest. And remember, Brazil is an absolute heavyweight in the global coffee supply chain. So the crucial point here is the result of that ruined harvest. It caused a massive 30% rally. Over just the last few weeks, coffee prices shot right back up. It is just a perfect example of how hyperlocal weather events in key agricultural zones can create sudden scarcity, and that sends major shockwaves through global markets almost overnight. Section 4, Forecasting Your Morning Joe. All right, let's bring all of these macro global weather concepts down from the atmosphere and right into that mug sitting on your desk. To navigate this exact kind of intense market volatility, paid subscribers to Climate Intelligence actually utilize a really powerful tool called the BestWeather Spider. And it doesn't just track coffee, it provides real-time trade sentiment across multiple volatile commodity markets, including stuff like sugar, grains, and natural gas. It's basically a dashboard designed to help people understand exactly where these totally unpredictable markets might be heading next. And this brilliantly illustrates how the BestWeather Spider cuts through all that noise. It rests on 3 core pillars. First up, you have seasonality, which is understanding the historical cycles of planting and harvest. Second is chart patterns, so all the technical market data. And third, the undisputed wildcard of the whole shebang, weather. By synthesizing these 3 elements, forecasters can actually spot the true market direction well before it ever hits the mainstream headlines. But looking ahead, the forecast is anything but simple. We currently have these dual threats looming on the horizon. On one hand, you have the completely unknown role of an upcoming El Nino pattern. Like, how is that going to shift global moisture? Nobody knows for sure yet. But then on the other hand, there's this actively developing dry spell that is currently hitting Vietnam's Robusta crop. Now, Robusta is the cheaper, much hardier variety of coffee that's traded on the London Exchange. If Vietnam dries up while El Nino completely scrambles global temperatures, well, the entire global supply chain is going to get incredibly tight. Which really leaves us with the ultimate question. Will your cup of Morning Joe go up or down over the next few months? I mean, are those volatile rains in Brazil going to stabilize, or will this dry spell in Vietnam force a massive shortage of Robusta? Understanding the weather is clearly the absolute key to anticipating your own grocery budget. If you want to stay ahead of the curve and find these answers, tapping into Climate Intelligence data might just be your best next step. Keep questioning the data, and we will catch you next time on The Explainer.